Okay, perfect. Well, now on the VAT module. Okay. Let me just switch off the lights. Let's see this more clearly. Better, right? Okay. Right. So this module, we've had VAT in our accounting 1A, okay, that you obviously did last semester. Okay. So this is now obviously we're looking at it from the perspective of how we obviously manage our VAT when it comes to through Sage. Okay. So the first thing that we obviously are concerned with is actually setting up the VAT. Okay. So let's get into that and see what they have to say. Here they say, before setting up any other important information, you need to make sure that your VAT periods are set up in Sage Accounting. Click on Company, change Company Settings, and then VAT Settings. Okay. At this point now, I'm sure I don't need to actually go step by step with you guys via the demo company. Okay. But if you want to try it, you can try it out. It's always good because then you'll never forget how to get there. It's fine. Don't worry. Don't try to register or log in. Just go back to the sign in section. Okay, then go to the demo. This is really just so company. Change company settings. They give you that option there. Okay, so can you see they just blocked it out because obviously you're in the demo company, so they don't want you to change the settings. But those are the steps. So you click on change company settings, and then from there you click on VAT settings. Once you've done that, you would then see this screen here. You see? And here you can see we've clicked on VAT settings. Okay? Right. Now, let's just read this bit before we go any further. What's on the screen? Ensure that your VAT details are correct. If you do not have any information entered, enter your company VAT number, right? Which is this over here where it says VAT number. Okay. Then it says select your VAT period and submission dates as well as your frequency that you will be paying VAT over. Okay. If you remember, you can be paying for VAT either twice. Let me start with once a month. Okay. Twice. Every 2 months. It can be every 6 months, and it can also be annually. Okay. Yeah. So that's how frequently you could be potentially doing it. So here, when you say VAT period end date, for instance, we're at the beginning of the year. So let's say we do our VAT every 2 months, which is the most common one. All right, every 2 months. So then we say our last VAT that we paid was end of February, for example. Does that make sense? And then our submission date. Remember, the submission date is the next month on the 25th. That's just so our submission date would then be March 25th. Does that make sense? And then obviously that reporting frequency it would be every 2 months. Okay, that's how it would be structured. Okay. Then obviously here you'd be ticking off our goods are standard rated, and so forth, so forth. Okay. So that's typically what we'll be setting up here in the settings. And can you see here, VAT system, it would be invoice based or payment based or no VAT if we're not registered for that. Does that make sense? But typically, remember invoice, just to recap, you probably do remember these things or know these things. Invoice basis is when we say only when, let's say if we've sold on credit, only when they pay us the cash are we then liable for the output tax. Only when we have paid our suppliers the cash for something that we are buying, then we can claim input tax. Okay? Sorry. That is actually the payment basis, the cash basis. The invoice is the fact that a transaction has been completed. even though it's on credit. I can still claim input, I can still confirm output that took place when I made the sale. And when I'm buying, I can claim input VAT, even though I haven't yet paid my supplier. Does that make sense? That's invoice based. Payment based was what I was explaining initially. Only when the cash has completed the transaction. It's also known as the cash basis sometimes. Okay. In your textbook, I know it's like that. All right. So that's. Let's see what else they have to say there. Okay. Secondly, you must set up your VAT periods in Sage Accounting. Click on the accounting area, VAT Returns and Reporting. Okay, so you'll see this screen if you haven't done this already. Create and manage your VAT returns, view your VAT reports, process your VAT payments and refunds all in one place. Okay. Sage Accounting will manage everything there is around your VAT submissions. You will be able to view reports, process VAT transactions like payments and refunds, and more importantly, close each VAT period as you submit your return. Okay, cool. So that is pretty much communicating the same information there. Okay, so that's the overview there. It's talking about creating your VAT returns. Here you put in your VAT number. This is assuming you haven't already done it. Okay, if you haven't already done it, this is where you would need to do it. Okay, then VAT period. So you put in your VAT number there. Then what we spoke about earlier. This would then be February again, end of February, 28 February. All right, and then the submission date, which would be 25 March. Okay, and then enter the VAT reporting frequency in months. Okay. Right. All right. Enter. So that's just repeating the same thing. And here you can see the end date. If you look at the information over here, they're saying the end date is 30 April. And therefore, your last submission date, June, was 25 May. Can you see that? The following month, 25th. 25th of the following. Right. So the principle remains the same. That's all that I wanted to quickly highlight over there. Okay. The summary screen will display showing a summary of your selections made on VAT period and submission date screen. Okay, so here you can see the summary as they've highlighted here. VAT period ended 28 February 2019. Okay, let me read it off the screen. Can't really see this all too well. Okay, hopefully that should help. Okay, right. Okay. Okay, so the only thing that worth mentioning here is the fact that they've also introduced now that period ended on. Based on your reporting frequency, your next VAT period will end 31. Okay, so the VAT period ended on 28 February 2019. There they're speaking to when you close your previous VAT period. Does that make sense? So basically on the 28th of February, and usually this coincides with your year end. You know, your financial year end of a company. So you usually coincide your closing VAT period. Okay. Now what that means, your closing VAT period is once we cross over this date, we can no longer go back into our VAT transactions prior to 28 February 2019 and start amending things and changing things. Does that make sense? So you can potentially look at the previous stuff, but you won't be able to amend the stuff because we will have already closed off. Does that make sense? So you need to change. Sorry? So you need to change it. It is possible to go back and change it, but yeah, they discourage against that because we would have submitted, like any returns that we owe to SARS, we would have paid that off, and any amount of money that they would have paid us, any refunds, they would have paid us. So that's why it's discouraged that you go back into this and start making changes. Okay? Because that means that also whatever you owed SARS or whatever SARS owed you is also going to be affected. Does that make sense? So you don't want to do that. Okay? Although it is possible. Right. All right, and then obviously you just click finish, and that'll be the end of it. Okay. Okay. Let me zoom out a little bit here. The VAT Returns and Reports screen will display hover all the options for more information. Okay. So this is what I was talking about. All right, in relation to close VAT period. If you select the close VAT button, Sage Accounting will close off the current VAT period that you are working in and move over to the next VAT period. Okay. All right. So you don't want to click this until you are sure you're ready to close off that VAT period. All right. Then view. Okay. Now here you can see it's view VAT 201 report. Again, in your accounting one, we spoke about the VAT 201 report, which is what we submit every VAT at the end of every VAT period. We submit this to SARS. Okay, and it pretty much just confirms how much input VAT we had, all right, that we're claiming, and how much output VAT we owe to SARS, and then obviously calculating the difference between the two. Okay, that's why they say VAT 201 calculation report. All right, then here, view VAT report. This option allows you to view the VAT report for the current VAT period. Okay, then start over. If you select this option, all the VAT periods will be removed. All the VAT periods will be removed, and you will have to start up again. Okay, the values for each period may differ to the actual returns you have submitted to your revenue authority. Please be careful before selecting this option. Consult your financial practitioner. Okay, so don't be quick to do that. Okay, then to reopen, remember I told you can actually reopen. Reopening a VAT period should only be done if your intention is to resubmit your VAT return to your revenue authority. For example, all transactions in the VAT return for 12/2019, so in other words, December 2019, will be unmarked as finalized, and you will be able to edit these transactions. Any transactions that have been backdated prior to or including 31 December 2019 and that have been included in any other VAT return will be included in the 12/2019 VAT return once you close this VAT period. Okay. Right, then view, same thing. Then you can allocate your VAT return amounts to the correct VAT period by selecting the payment and by selecting the link payment and link refund option. So here, remember, after we've done our calculations, if you're ready to actually pay SARS, then you can obviously click on that and then pay them. Or if you're ready to claim for a refund, because sometimes we might. When do we have a refund? When do we have a payment that we need to do? Do you remember? When do we owe SARS and when does SARS owe us? So remember, input VAT is what is owed to us, right? And output VAT is what we owe to SARS. So if our input VAT is greater than our output VAT, that means that SARS owes us. Does that make sense? Because the difference between input and output will be later on the input VAT. If, however, it's the other way around, if we owe more output VAT than input VAT, that means that we need to pay something, because output VAT is what we owe to SARS. So in those scenarios. Okay, cool. So let's move on. So that is the setting up VAT. Then the next thing they want to talk to there is adjustments. Okay. So it's possible for us to also make adjustments. Okay. And remember when we were doing accounting 1, and I know I keep saying remember, I know I didn't teach you accounting, but I'll recap on whatever I said, remember, so don't worry about it. Okay. Now, whenever we had made an error in accounting, when it comes to VAT, let's say we claimed too much input VAT, all right, because maybe we returned some goods that we bought from a creditor. Remember, whenever we're buying and there's VAT on that transaction, we can claim input VAT, okay, assuming it's standard rated. Okay? So we're buying from a supplier, then we say, we claimed input VAT on 5,000, but it turns out we returned 2,000 back to the supplier because we didn't need the product, or something was faulty. Okay? We returned 2,000 worth of goods. That 2,000, we also need to calculate the input VAT on it. And now to reverse that input VAT, we then do an output VAT transaction. Does that make sense? So in doing that output VAT transaction, that's how we reduce the input VAT. Okay? So the reason why I'm giving you that backdrop is so that this makes sense why we would need to do an adjustment. Okay? In that type of scenario, we need to adjust. Also, vice versa. If we sold to a creditor, for example, to a debtor, somebody that owes us, and this person doesn't pay us, then we need to reverse some of the output VAT that we said, SARS, we owe you output VAT because we sold 10,000 worth of goods to a customer. Okay? Now, to reverse that, we then need to do a input VAT transaction. Okay? So that's just the backdrop to when we would need to do adjustments. Okay. So here, what are they saying? VAT adjustments allow you to adjust the amount of VAT that is due to you, called input VAT, or the amount of VAT that you need to pay, called output VAT. Click on Accounts area and then VAT Adjustments. Okay, that's how you arrive at this screen. There you can see new VAT. Here you can see new VAT adjustments. Okay, so we plug in those VAT adjustments here. Okay, and then processed, it means that we have created a new VAT adjustment and we've clicked process. Then it will be sitting on the process VAT adjustment. Does that make sense? Okay. So I'm sure you've seen that before when we were doing the bank and when we were doing some, it's another section where we also had, just forgetting now. Okay. Journals. When we were working in the journals, it was also like that. Okay. So yeah, there you can see that's pretty much the breakdown that's happening over there. Okay. The stuff there is pretty much explaining what I've already just mentioned. Okay. Then we have payments and refunds. Okay. Payments and refunds. Okay. Sage Accounting will calculate your VAT for you as shown. Your input VAT is calculated by working out the VAT included on all the supplier invoices and other VAT related transactions that you have processed in Sage Accounting. Next, your output VAT is calculated on working out the VAT included on all your customer invoices, okay? Included in all customer invoices and other VAT-related transactions that you have processed in Sage Accounting. The difference between the two is the amount of VAT that you owe, okay, which is what I was explaining in terms of the VAT 201 calculation. This is what they are. It's the same thing that I was explaining there. Okay, if your input VAT is higher than your output VAT, a VAT refund is due to you. Okay, makes sense? We're just revisiting the same. Okay, a VAT refund is due to you. click on Accountants area, VAT, and then VAT Payments and Refunds. Okay, and that will land you up at that screen there. Okay. Okay. You'll then obviously fill in the information as to obviously VAT report by period. I know there are other options that you can see there on the drop down. Play around with these things, get comfortable with them, see what you can and can't do. All right. And then obviously VAT period that you're looking at there is obviously the second month of 2014. Okay. And there, can you see you've got your VAT output, the total VAT output there, and you've got your total input VAT there. And there you can now see it's calculated for you there at the bottom how much VAT is owed. In other words, how much input VAT you're going to get refunded. Does it make sense? Okay. Right. Morning, guys. Okay. Then the next screen there, it says in the details section, you will edit the date for the transaction and the bank account you will be that will be affected. Okay, so not only are we calculating here the VAT that we need to be refunded, we also on details are now saying, okay, which account must SARS pay the refund into? That's what details is all about. Okay, here you can see you were selecting refund because we're the ones who need to get paid. All right, we're selecting the date on which we have obviously done this transaction. All right, under details there it says specify the date of the VAT payment or refund. You will need to select the bank account and enter a reference and description for the payment or refund. You can change the payment or refund amount if necessary. Okay, obviously this is not recommended. Okay. And there's your information there. All right, that you need to insert. Okay. There you can see also the payment option. If we were the ones who are actually paying SARS. And that's really it. Okay. The last bit now is your VAT report. Okay, what's going on with the VAT report? Okay. VAT 201 calculation report. The VAT 201 report is a declaration that you need to make at the end of every tax period if you are a vendor, okay, which reflects the VAT that you have charged on supplies, on supplies or transactions on which you are liable to declare output VAT, and the amounts that you believe are entitled to deduct as input VAT. The difference between these amounts for the specific tax period can either result in you having to pay the difference to SARS, or you would be entitled to a refund of the difference. Can you see we're revisiting the same thing again? If you are registered for VAT, you must submit your return by the due date, even if there is no payment required for the tax period. Okay, so it's very important that you note that. I know you guys are the next Jay-Z's, Kanye West's, and Beyonce's of the world. Okay, so when you're running your enterprises, please remember you need to submit your tax or your VAT in this particular instance. Okay, even if there's no VAT that is owed and there's no VAT that needs to be refunded. Okay, click on to get to this screen. You're obviously clicking on reports. Remember, all our reports, we click on reports. Can you see how easy Sage is? That's what I was saying, guys. You play around with this thing. You don't need to cram this thing. You just need to understand this is where that is. Customers, everything that relates to customers is there. under customers. And Terry is smiling at me because he knows, they're tricky. Yeah. Those are tricky. I won't. Those are tricky. Okay, my recommendation is you need to read the manual if you want to. And the manual, the good part is it has those questions at the end of every unit. That helps you to gauge what's important, you know? So that multiple choice is tricky because the answers are quite similar. So it's easy for you to go left, okay? So anyway, how we arrive at this screen: reports, VAT option. In the VAT returns and reports screen, click on reports and then VAT 201 calculation report. Okay, so this is what we are submitting to SARS. Okay, let's see. Okay, select the VAT period end date. Okay, and the date range that must be displayed in the report. If you want to include VAT adjustments on the report, click the include VAT adjustments. You can see the include VAT adjustments is here. All right. They're saying basically check that box, okay, in relation to that. Then what else are they saying? Check the VAT adjustment. Okay, read that. Check the offset credit in sales purchases. Check box to offset credits against sales or purchases. Uncheck the box to show these separate. Probably separately. Yes, separately. Okay, right. So this is now, how do you want your report to look like? Do you want to include the adjustments that you may have made during the VAT period? Okay, remember, adjustments, we're saying, in the event that when we want to rectify, I don't know if you guys stepped in, we weren't talking about adjustments when you guys stepped in. But adjustments, remember, when we're doing accounting, you will find a situation where we bought goods from a supplier with 5,000 rands, for example, right? Then we say, you know what, this goods are damaged. This equipment is damaged. We return 2,000 worth of goods. Remember, when we first bought these goods, what type of VAT was on the 5,000 worth of goods that we bought from the supplier? I love the fact that you're doing that hand gesture. It's a good way to remember these things. It's input VAT, okay? So now we're basically saying we declared input VAT worth on 5,000 rand, but we returned 2,000 worth of the goods. So we need to rectify that. Can you see why we would now need to do an adjustment? Now, if we want to correct input VAT, what do we need to do? What type of transaction do we need to rectify that? Because we can't rectify input VAT with an input VAT transaction. We have to do the opposite. Hey, Terry is talking with his hands today. So we will have to do what? An output VAT transaction to rectify that. Okay. So I'm just now recapping to say, if you want to show that those type of adjustments, and vice versa, if we need to rectify an output VAT, we have to do an input VAT transaction to rectify or reduce or edit that output VAT. So if you want to show that to SARS, then obviously you just click on include. All right, offset credit on sales or purchases. So here now, if we're saying, hey, leave out transactions done on credit, that's pretty much what I believe they are saying over there. Okay, then obviously step 3, allocations. You will use the VAT allocations list to determine which VAT types in Sage Accounting relate to which VAT codes. Okay, in your VAT 201 submission form, click on View Report, and there, if you look close enough, let's try and zoom. Okay, so here you can see now, standard rated, excluding capital gains and other and/or services and accommodation, standard rated only capital goods. Okay, so you are now selecting this now based on your company. the stuff is not applicable, I think you just leave it like this, select text type. It's not applicable to your business. Because you won't have transactions that relate to exporting second-hand goods, so why bother and try it? Okay. But if you do, then obviously you need to understand what that category is that, and then obviously select the appropriate one. Okay, right, let me. So that's all you're doing there. Okay, and then this is now your report. You can see now what your report would look like. Okay, I'm just going to read this, then I'll zoom in on the report. Please note, the figures that appear in this report are a guide only and should be checked carefully. This report serves as an aid to completing your actual VAT 201 return and cannot be submitted to SARS. All right, so I'm disappointed that they're saying that, because in my mind, these guys should set it up such that you can then just send it to SARS. That would be the most ideal. I mean, we're using this technology to make our lives easy. Does that make sense? So there you can see now. Can you see? This is why I was saying I was using this one. Change in and export of second-hand goods. Can you see it's 0? We don't, that's not our business. All right, we're in the business of selling t-shirts, okay, and other merchandise, which we know is standard rate, okay? So we listed that type, okay? And yeah, on all the stuff that's not applicable to our business, you can see there's a 0 over there, okay? And then obviously it's calculating the refund for us over there, okay? It doesn't want to zoom out. Okay, there we go. Okay, guys, and that's your VAT module. That is your VAT module. So you can see here all that we have left. Budget. Are you now getting the gist of why I said this is a module you guys could literally teach yourselves? Yeah. Says the website. The Sage University website. Demo company. On the portal. Okay, yeah, I'll open it and then let's have a look at that. There was a lot of confusion. You could see that's why I was also giving you information as the day was progressing. That's why I was because a call. I think it was a call. Yes, yes.